It's 1:30 p.m. in Lagos, same time in London, and we're bringing you market insights and analysis on Business Incorporated. Here's what's coming up on the program. WTO warns of first signs of trade deglobalization. And in Kenya, mobile money payments grew by 6.3% in July, with expectations of the wider growth in the coming months. And in the global oil markets, Brent crude futures hits $91 a barrel. Hello and welcome to the program. I'm Will Ibang. As always, let's check in on the market, starting with Africa, where it was negative sentiment on the African continent at intraday. Nigeria's NGX was down 1.02%. You see there, EGX, SA also down more than 1/3%. You see the EGX still at intraday there. We see it's 0.61%, more than 0.5% down. And Kenya closed Monday's session in green territory. At least that's positive for the African markets. Now, mostly negative sentiments. We look at Middle East. We see the Abu Dhabi index up 0.02%. Dubai down 0.34%. Saudi also down 0.67%. And the Qatari index also down 0.17%. Now to the EU, where Germany used to be Europe's economic powerhouse. Not anymore. The EU Commission has just published its latest numbers, and the forecast for the bloc. Lars Alter is with Deutsche Welle in Berlin, and he has more to tell us about that. Lars, what can you tell us there?
Thanks for having me. Well, it's kind of a sad picture. According to these latest numbers out of Brussels, Germany is looking at a recession for this year, with gross domestic product down 0.4%. And then next year, the experts are expecting growth of 1.1%. That is also not very impressive at all. The EU in total is expected to see economic growth of 0.8% this year and 1.4% next year. Now, these numbers are also weaker than originally estimated. And why? It is because of the negative impact of the weakness in Germany. And let's have a look at how Germany compares right now with the rest of the bloc. At first glance, you'll find that no other country is expected to see negative growth this year. Now, that puts Germany squarely in last place for Europe. Meanwhile, we're seeing the Spanish economy with expected growth of around 2% for each of the next 2 years. France will grow at just over 1% each year, and Italy is just a tad under 1%. Germany has become the sick man of Europe.
And why is Germany, Lars, I just want to know there, why is Germany falling so deep, and how can it be fixed?
Yeah, there's obviously a number of problems. Last year, after Russia invaded Ukraine and was sanctioned by the West, Germany lost most of its energy supply. It has replaced it now, but energy prices have gone up, and these now stand behind most of the economic problems in Germany. Higher prices, so here we are once again talking about inflation. As things are getting more expensive, wages are up less than inflation, and that has put a damper on private consumption. Again, weakening the economy. At the same time, weakness in other parts of the world is leading to lower demand for German goods. So not only do Germans shop less, but trading partners too. Among those, of course, is China in the midst of its own economic crisis. How can these things be fixed? Well, problems in China and other economies, there's not much Berlin could do about that, but elsewhere they could just be moving a bit faster. Look at those higher energy prices. Again, the government has been discussing a subsidized energy price for businesses. That could be very helpful, but it can't figure out if or how to do it. There's also the lack of skilled labor Germany is dealing with currently, while there's at the same time millions of refugees coming into the country. Many of them are highly skilled people, but they're not allowed to work, again, for bureaucratic reasons. So there's a lot Berlin could do to fix these problems, but we're seeing very little action.
So what are investors looking at in today's markets?
Well, it's the old waiting game. Not much happening until we know about U.S. inflation data, which is what everyone is focused on, as it might give a hint on future Fed policy. Over the past few days, leading economists said they did not expect the Fed would hike again and would begin slashing borrowing costs in the new year. Meanwhile, with a look at China, property shares there are doing better. Troubled real estate giant Country Garden managed to extend payments on some bonds by 3 years, winning some time to recover financially. And that has helped the entire property sector recover a bit, including rival China Evergrande.
Thank you so much, Lars Alter there in Berlin with the updates. Thank you so much. Now let's head now to the UK, where reports shows Barclays Bank is about to lay off 450 workers. So Juliana Olayinka is there in London with the updates, developments on the story. Juliana, good afternoon. I hope we're not going to drown in a deluge of, job cuts.
It does seem to be job cut season. Good afternoon. Well, we just had this breaking news actually about an hour ago in the city, and that is that Barclays Bank, as you quite rightly said, is going to be cutting 450 jobs from the UK. We believe this is going to be from their retail division. Within the UK, Barclays pretty much focus on mortgages, personal and business banking. Now, Unite Union, which is a union looking after particular workers in the UK, they've responded to the announcement by Barclays, and they said this is completely unjustified and unnecessary. And especially if you look at Barclays' Q2 performance, which it brought in about £2 billion of pre-tax profits. Now, this story was first mulled by, I believe, Reuters and Bloomberg. In fact, it was yesterday that there were reports swimming around about Barclays' performance. Their CEO, Venkata Krishnan, he gave an interview and he was talking about this review strategy that he is overseeing, because even though pre-tax profits to our ears may seem good, but apparently shareholders, especially those in the US, they're not happy with Barclays' performance, particularly if they compare them to other investment banks in Wall Street. But as I said, this is a job culling season. We've also seen similar calls from Morgan Stanley. I believe they let 3,000 of their staff go in Q2. Goldman Sachs are currently reviewing performance. Anybody who's a banker knows that underperformance means you're out, particularly at this moment in time. And Citigroup as well, they let 1,600 jobs go. So this is not great. 450 jobs, as we quite rightly said. Barclays UK staff, this is all part of a strategy review, but not great to be waking up or leaving the office to this story.
It's definitely not a tale people want to wake up to, Juliana. You're rightly correct about that. You said it right. But we've seen also today the UK mortgage arrears hit its highest since 2016. The amount of UK mortgages arrears has hit its highest level, and that's for about 7 years now. More borrowers struggling to meet their repayment plans. Is this going to be something we would keep seeing, especially now that the BOE is mulling more interest rate hikes?
Yeah, you're absolutely right. I think the data that we've seen, which actually come from the Bank of England, I think it just kind of highlights the plight of the housing market in the UK. As you quite rightly said, these successive interest rate hikes, currently at 5.25%. We expect them to be hiked up even further when the MPC meet in the city next week. Of course, they're doing this to combat inflation, but as we know, high interest rates means it costs much more to borrow, and there has been a burden on the back of the necks of mortgage holders who are really struggling. And according to this data that was released by the Bank of England today, I believe there are currently about 85,000 households across this country that are in arrears for their mortgages to the tune of about £16 billion. And this is a critical issue because, of course, we are going through a cost of living crisis. So forget, high grocery bills, high energy bills. There are a trance of people, in fact, 85,000 households in this country who have seen, for some people, an extra £500 a month on their mortgage payment. That's about 500,000 naira, just to put it into context, every month, Will, on top of their already pre-existing bills. It's just too much, which is why we're seeing these arrears. Now, to be fair for the government, it's good to have some balance here. Jeremy Hunt, the Chancellor, did have some sort of mini summit with mortgage lenders in the UK, the big ones nationwide, HSBC, including Barclays too. And there are measures in place. So if you are watching from the UK and you are struggling to pay your mortgage, please go and see your bank manager. It can be quite scary being in debt, of course, but there are ways out. I believe there are 3 or 4 measures. It's very unlikely, because we're going through quite an extreme time, that your home will be repossessed. But it does go to show, you know, that on the one hand, raising rates is great to bring down inflation, but you raise rates and there is just a minority of the country that are paying the burden for everybody. And I think that's been highlighted with the data.
It's quite demoralizing, Juliana, to think that after all these years of paying mortgages, that one day the government's just going to come back and just repossess the homes you've been, you know, so attached to, and what you've been putting all your efforts into. I just hope that this situation abates soon. But how are investors in the UK bracing for the inflation data tomorrow, and how are the markets also looking?
The markets are actually looking pretty good at intraday. The FTSE All Shares up. It's up by 0.48%. The FTSE 100 is up too by more than 0.5%. The FTSE 250, which is the domestic market, it's up by a smidgen at 0.05%. In the currencies, the rally against the dollar by the British pound has ended. It ceased. It's trading down against the US dollar by 0.30% at intraday. It's also trading down the British pound against the euro by 0.02%. and down against the Japanese yen by 0.13%. Well,
thanks so much, Juliana. Always bringing the facts behind the figures. So now we move to the U.S., where stock futures fell early on Tuesday as investors come off a positive day. Futures tied to the Dow Jones Industrial Average lost 17 points. S&P 500 futures fell 0.3%, and NASDAQ 100 futures were off 0.3%. Now, Oracle slid 10% in extended trading after missing revenue expectations of analysts surveyed by LSEG, formerly known as Refinitiv. But the database software company beat Wall Street's consensus estimate for earnings. Oil prices also weighed on sentiment, raising fears about sticky inflation, slowing global economic activity. U.S. crude prices touched the highest since November of last year, according to FactSet, and Chevron shares were among the few pre-market gainers. Now in Asia, markets mostly fell on Tuesday after Wall Street saw a tech rally led by Tesla and Qualcomm. Tesla shares jumped 10% after Morgan Stanley upgraded the stock and predicted a significant rally ahead because breakthroughs with autonomous software. Qualcomm shares rose nearly 4% after the semiconductor company said it will supply Apple with 5G modems for smartphones through 2026. Now, investor sentiment was also helped by reports in the Wall Street Journal on Sunday saying there was consensus among the Federal Reserve not to raise rates at next week's meeting. Now in the oil space, Brent crude futures hovered just above $91 a barrel on Tuesday as investors awaited a slew of macroeconomic data due later this week that could indicate whether Europe and the U.S. continue to hike interest rates. The international benchmark Brent contract dipped 6 cents to $90.58 a barrel, while U.S. West Texas Intermediate crude futures moved 72 cents higher to $88.02. Brent reached $90 a barrel last week for the first time in 10 months after Saudi Arabia and Russia announced they would extend voluntary supply cuts of a combined 1.3 million barrels per day until the end of the year. Now we'll go over to the metal space, where gold prices settled into a holding pattern on Tuesday as investors awaited U.S. inflation figures that could provide an updated view on interest rates after the Federal Reserve kept the door open for further policy tightening. Spot gold was down $6.27 at $915.36 per ounce, while U.S. gold futures is 0.39% to $1,936.20. Market activity is likely to be broadly subdued until the U.S. Consumer Price Index. The data is out on Wednesday, which could provide guidance on U.S. interest rates after a widely expected pause by the Fed next week. Welcome back. Now, plantain is a seasonal crop that is consumed in many forms across most continents, including fried dodo, boiled, roasted, and porridge. Now, since the beginning of 2023, the price of a big bunch of plantains have surged 250%. From 2,000 naira to 7,000 naira in Nigeria, much higher than food inflation, currently at 26.98%. Now, Victoria Momo, analyst with financial derivatives company, joins me to break this down. Victoria, what is responsible for this astronomical hike in the price of plantains?
Good afternoon, Ini, and good afternoon, Will. Thank you for having me. So first and foremost, like you rightly said, plantain is a seasonal crop, and the price of the commodity is actually affected by the season. If it's on season, the prices decline. If it's off season, the prices rise due to shortage. But apart from that, we have the issue of increasing demand for plantain, and that is because plantain has alternative uses. We've seen fried plantain chips. We've seen, dodo ikire. We've seen plantain flour, and there is the increasing demand for plantain, not just for the direct consumption, but for, other derivatives from plantain. So that increase in demand for plantain is actually, triggering the price of the commodity. We also have the aspect of transport prices. When compared to the beginning of the year, transport prices for intercity bus transportation has actually increased by above around 100%, and that is being filtered into the prices of plantain. And due to the fact that plantain is actually produced in the southern area of Nigeria, this commodity has to be transported to other regions where they are needed. And we have the process between when this commodity is being transported from the farm to the central point, and also where it is being distributed to like the market and all. So there is also some logistics challenges that affect the supply of plantain, and that is due to the fact that some of this plantain would not get to the final destination because of poor roads, and then you find out that most of them are spoiled, and as a result of that, we could see like a decline in the number of plantain that is available for sale at the market. So that has supported the price of plantain. But the good thing is that we are gradually approaching the peak harvest season for plantain, and it's likely that we see more plantain in the market, and then the prices of the commodity actually moderates in the coming term.
So we've still seen that, according to data that we've seen from the Food and Agriculture Organization, FAO, Nigeria is the largest producer of plantains in the world, and it accounts for about 30% of the global output. And we have an annual production of approximately 3.1 million metric tons. But yet, the country is yet to establish a notable presence in the global plantain space, unlike countries like Cameroon, Ghana, Uganda. What is the challenge here? What is stopping Nigeria from successfully flourishing in the international plantains markets?
So the thing is, we actually have a very large growing population, right? And the demand for plantain is rising, for different uses, basically. And this high demand, domestic demand for plantain, is actually, taking a significant portion of the production of plantain in Nigeria. So you find out that most of all these plantains are being produced to be consumed domestically. So we have, little or no plantains for export in the international market. So we are not being able to take advantage of, the international sales. So aside that, we also have the issue of post-harvest losses, which has also impacted the availability of plantain in the country. I mean, farmers are not so encouraged to, produce with the aim of exporting, because, there is issue of poor storage facilities, issue of lack of processing, equipment to add value to plantain in order to, preserve the shelf life of plantains in the country. So you see that this is actually affecting the availability of plantain to even meet the domestic demand, talk more of exporting it outside the country. So we're not able to take advantage of that. But we could actually, find our way around that by, reducing the risk of post-harvest losses. That is by adding value to plantain that is processed processing it, drying it and packaging it well to improve the shelf life of plantain. In addition to that, we could also, or the government could also implement quality controls to ensure that the plantain that are, being produced are being meet the international standard. And the more the quality, the more the market value of the particular commodity. And this would actually, improve our export earnings because, plantain production alone has the capacity of, of bringing about $2.5 billion in export earnings into the country. So that is one thing that we have to do in order to, take advantage of the international space. Even farmers too can actually, just make some arrangements with the market before harvest to ensure that the plantain would be given to the market even before harvest in order to reduce the risk that is involved in post-harvest losses.
Okay, you've just talked about post-harvest losses and you mentioned some value additions. You mentioned value additions in terms of making plantains more viable and adding value so that we can export it outside the country. Well, what are some of the strategies that can be employed to ensure that we overcome the challenges hindering efficient plantain processing in the country?
So plantain in its raw form is actually doesn't yield as much revenue, right? So it has to be processed in order to get, more earnings from the export of the commodity. So we can actually process, plantain chips, we can export it out, we can export dried plantain, we can export, plantain flour, and this would actually, bring in more earnings into the country. And there is also a research from Bill and Melinda Gates Foundation that stated that we have this demand supply gap of about 100,000 metric tons of plantain flour in the country. That is, we are producing below the demand for the commodity. I mean, in Nigeria, we're producing only 25,000 metric tons as opposed to the demand of 125,000 metric tons. And this is leaving us with a supply gap and an opportunity for us to take advantage of that in terms of increasing the value, processing it into, plantain flour and also making money from it. And, some of the things that we could also do is to boost access to finance for smallholder farmers, because these smallholder farmers constitute about 70% of the plantain production in Nigeria. And if they are not properly incentivized, we could see shortage in plantain production. And if they don't have access to this processing equipment that could, add value to the plantain that we produce, we would see that the post-harvest losses would be very high, and the number of wastes from plantains would be, very high.
Right.
If you take a very cool walk to Idiaro, where plantain is majorly, sold in Lagos, you find out that there is a whole lot of plantains that are actually being wasted there.
Okay.
And those plantains could actually, come in handy in terms of, adding value to it and also creating other derivatives from plantain and earning more money.
Okay, thank you so much, Victoria Momo. We look forward to seeing more value addition from plantains processing in Nigeria. Thank you so much, Victoria Momo, analyst with Financial Derivatives Company. Now move on to other stories where the World Trade Organization is warning of first signs of trade deglobalization as fragmentation is gradually becoming apparent. In its annual report on international trade, economists with the World Trade Organization argued in favor of first signs of trade fragmentation to growth and development. You calculate political blocks that split a vote at the UN General Assembly. It did not identify countries by name, but tensions have arisen between the West and Russia and China. In the report said the between the two sides have grown between 4 and 6% slower than within each bloc. Now to Kenya, where mobile money mark payments in Kenya has grown by 6.3% in July, with expectations of the wider growth in the coming months after the Central Bank of Kenya approved higher transaction limits. The CBK data shows mobile payments hit 684.64 billion shillings during the month, up 643 shillings in June, highest value of monthly transactions since 0.06 billion shillings. Last month, the CBK allowed Safaricom and Airtel to increase the daily mobile money transaction limit from 150,000 shillings to 250,000 shillings. It also allowed them to increase the mobile money wallet size from 300,000 shillings to 500,000.